This conference will now be recorded.
Okay, so and we've recorded the last one, and I'll get that posted and everything also. But what we're going to attempt to do is to make Terrell the presenter and let him share his screen. Let's see if this will work.
Hold on. Hey, Professor Boyd.
Yes.
Yeah, you're gonna have to go ahead and switch my group. You got me in team 4. I'm in team 3.
We used to be team
We'll
4.
switch that. Don't worry. We aren't into that right now.
All right, I'm gonna be quiet and I'm gonna go ahead and hit my mute again.
Thank you.
We used to be team 4.
I don't want nobody trying to say we was contact. Maybe he didn't reach out.
Okay, so let's try it again.
Let me download Excel document real quick, Professor Boyd.
Okay. Share.
I need one of them chairs.
Okay, who's that saying there? Change the groups or something?
He didn't change group. Group 3 used to be group 4, and so he just, I guess he didn't know that he didn't hear the adjustment that was made, and so on the document that we have, it still shows him as group 4, but he's actually in our group. In group 3. Dustin McLaughlin under A28.
Okay, so
He's in group 3. Unless you want to stay in that powerhouse group right there with group 4. They look like they out here with stuff.
Yeah, about that.
does that work?
Yep, too sure.
That work? Let's try it. Are you ready, Terrell?
Just about. One second. Uno momentum. Yeah, I'm ready. Uno momentum. Yeah, it's 6 hours actually. What are the problems? Just him and I do it. Oh, good. And he asked me a question.
For some reason, you're just not working.
I haven't accepted it yet.
I'm saying something wrong. Go ahead and accept it. Goodness.
All right. All right. So if you all bring your attention to problem A-3, we'll be working from today. All right, so the first part of A-3, all right, we'll just start up here at the top, the very top, with the net income. So if you look at the net income, we had a net loss. We actually didn't have a net income. We had a net loss of 25,000. So we'll go in here and type it in. Bang, 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 bang.
Okay.
The next thing we did, we went and found our depreciation expense.
Did he do the first thing I told him to do? Did he do the
I
first
missed
thing?
what you said. What you said?
What was the first thing you said?
What did he
Gladys,
say?
what's the first thing I told him? What is the first thing you're always supposed to do?
Was it depreciation and the income?
Well, y'all got some bad memories. Well, I don't know about this Alzheimer's with y'all.
Oh, you talking about the initial investment?
Okay.
Cash?
Who said that?
Casey.
Krishan?
So that was correct. So the first thing you're supposed to do and thank you, Kiara, was to get the change in cash.
You're welcome.
It was 50,000.
So his cash at the beginning was 100, it increased to 150. So he knows then, so go down to that cash. So put the beginning cash in.
I ain't mad to go order. I'll do the same thing. All right.
So the change in cash,
The change of cash is 50,000.
put that in. So that's the first thing you're doing. Now you know that those other three changes have to add up to 50,000. So we're trying to show you how to start this problem and work it in parts. All right, go ahead.
Okay. All right. So let's go back up. So while I'm doing this, I was just going to go down in a row and just explain each answer. But if you want to go in a particular order, Professor Moore, I can do that too.
Go ahead. No, you go ahead. However you want to do it. Go ahead. But I always want to see the change in cash first.
Okay. Going forward, I will follow that guidance. All right. Then we had our depreciation expense was a negative 25,000, so we put it under our uses column, sources column. I'm sorry.
It's not a negative. You just put 25,000 down. No parentheses.
Tracking.
Okay.
All right. We had an increase in our current asset, which was 25,000.
Which current asset?
The current assets that we have are cash. Hold on, let me just verify it. We had cash, accounts receivable, and inventory. So
Look at that.
for
So,
20,
so we've
I'm gonna break
already
it down.
cash. You
Oh,
said
so we
cash.
don't need to.
Yeah, we've already done cash. We don't do it again. That's what we're trying to find out and explain that change.
Okay, well I can explain.
What problem are you working on again? 3?
8-3.
8.3. Hope
Alright,
everybody
so-
has 8.3. I sent you the package.
I can't be a teacher because I don't like it interrupted. Anyways, so accounts receivable and inventory, the ones we're gonna use, is 125 plus a 150, which came out to be 275 for the year 2012. The difference between that and the year 2013 was 275. It was still the same number. Oh no, it wasn't. Oops. Do a little quick math real quick. Excuse me.
Why don't you treat each one separately? That's why I have the line. Let's
Huh?
do accounts receivable first. Let's just do each line separately. So what did account receivable do?
The accounts receivable, it had a difference of 25,000. I'm just gonna put it here for simplicity's sake. And then we had the inventory. The difference for the, oh wait, hold on, no. Yeah, the 25,000. The inventory was a difference of negative 25. So there was a, so if there's no net increase or decrease, how do we annotate that?
You're supposed to be showing each asset. And I'll show you what did account receivable do?
Account receivable went up by 25,000 from 12 to 13.
We have an increase in a current asset. It's a use. So you need to go over to increases in current asset. Go over on the increase in current asset. And now type in account receivable. Okay, eliminate that 25,000 above it. So the receivable, so you should be treating each item separately. And
Oh, a
That's
combination
okay.
of
What did inventory do?
the inventory went down by negative 25,000.
No negative. You don't need to use negative yet. Just show 25,000. So when the asset goes down, it's a source. When it goes up, it's a use. Go on.
And that's the last current asset that we had on our problem. Mhm. All right, so then we go down to our increased current liabilities. Well, our current liabilities, so we went to the current liabilities. The ones that we had were, let me look at the little paper. Make sure. Here's the, all right, so the current liabilities that we did have was accounts payable.
Mm-hmm.
That was the only one that we had, so we'll come here, and we had the net change was 50,000 plus 50,000.
Okay.
So we increased by 50,000.
We didn't type in accounts payable.
Bang. All right. So the next thing that we had going on was our long-term assets. The ones that did we have any long-term assets on this?
Yeah, long term.
The equipment. Yep, equipment. Yeah, so we had it. Our only long-term asset was equipment. Unless, it's. So we're gonna go here, equip, and the difference between the two was a 50,000 increase. So we're gonna actually move this over here. It's an increase by 50,000.
Yeah, but equipment goes, long-term asset goes in part 2.
Oh, I'm looking at this is loss of sales. Cool. Let me get my little paper out. All right. Can y'all see the screen? I'll try to make it larger. There we go. Back at the screen.
Each person's also able to adjust their screen.
It's a bit. Right. Oh, cool. Sorry. This one.
Okay, you're on the wrong side. So when the asset goes up, so in this case, equipment went up by 50,000, that's a use. When you buy something, your cash goes down. That's why it's a use. Moving on.
Okay. Sorry about that. Moving on. What was that?
Hey, Professor, can I ask you a question real quick?
Sure.
Are you going to allow us to use the chart of accounts during the... Oh, wait, I forgot it's online. Never mind.
Use the chart of accounts, Joanna. You cannot use the chart of accounts.
No problem.
Definitely gonna use that. All right. So, anyways, what were we? We said equipment. We did.
So we finished with her?
Yeah, we're on. All right. So now we have our insurance of our stock. It was for Oh, the common stock. Okay. And then we had our common stock. Do we even have to? That was a 25,000 change in common stock. So you said if it's increasing, then it'll go under
It's a source, so just put the 25,000 there. Get rid of that other 25,000. You don't need it but
Yeah.
one time.
right. It's a what you call it? So, a type 1, so it's going down. All right. So then we got insurance of common stock.
Now he's supposed to be scratching off each one, or somebody on his team ought to be scratching off each one as he does it.
Yeah.
Oh yeah. So our long-term bonds payable. So what did we put it? Where did we put it?
We put it in,
On the-
I'm definitely, man, I can't see.
Oh. Oh, it's not.
Professor Boyd, I have a question. You know how you do these recordings every class period? Where can we access these recordings?
In Blackboard, excuse me, in YouTube,
You said YouTube?
yes.
I checked YouTube today, and none of your recent ones were on there.
Okay, I didn't get into it. I didn't get a chance to do them. I will put them up tonight.
Thank you. Thank you.
Welcome.
Appreciate it.
I didn't know we did was what's this one? No, the dividends. Dividends.
Cheryl, you'll be a star tonight.
So Professor Boyd, since we got less dividends, is that going to go in there and take as negative?
Yes, and I think you had an easier problem. Did it calculate the dividends for you?
Yeah, it calculated everything for us except for the differences.
Get rid of that. Just make it 25, please. You don't need it in red.
I didn't put it in red. It did that on its own.
What?
Can I do mine on Word?
What?
Can I do mine on Word?
That's fine. Do you have a blank Word one there?
Look,
Yeah,
that's going
I set it up already.
Okay. So I'll let you do two things, Kiara.
I forgot to have it changed.
We'll do Joanna's first,
Okay.
and I'm gonna either let you or Terrell do the keyboarding for her. You don't need that. Should just be regular 25. Wait a minute. Get rid of the red. Just
It's just not. It's not. It's not going to change that, Professor Boyd. The red is,
let's do part one then. So do my totals for part one. What are the sources in
So-
part?
the sources was 100,000. 100,000
The
for the
uses,
source. The uses was 0.
okay,
The net change, obviously 100,000.
all right.
For part 2, the uses were 0. The
Sources were 0.
the uses were 50,000. Total net change was 50,000.
That should be a minus 50,000. So you have minuses in that last column on the right. So that's minus. Next, part 3.
All right, 75,000 was the sources. The uses was 25, and the net change was 50,000.
All right.
Where's the column for the
So when you combine those, do you get to a change of 50,000? You got 100 minus 50 plus 50, so your change is 100,000.
Correct.
But the answer down there is 50,000. So you and your team, especially with
Professor,
the,
problem that every single problem had. Do we forget something?
Yeah, that's the problem that all of us had. Did you do it on purpose?
yeah, let's show them how to do it.
Hey,
That's
question.
That's what South Carolina show you how to do it.
Professor Boyd,
Oh,
before we got a question for you. So for the depreciation expenses, did we calculate that correctly?
I think you did, but your team needs to get together and find the error. I'm not going to tell you what it is.
All right.
Wow.
I'm not going to tell you what it is.
Boy, just know you're not right.
Well, you got all these people. McLaughlin telling me he's on this team because they know what they got it going on. They know what they're doing. So
Take the thing. We can figure this out. Take control, Kiara.
oh, you sent it. I guess he sent it to you. But it still
Yeah,
got you sending.
it's not
So,
a,
Carol,
yeah,
you
it's
got
not
to
letting,
release it.
I did. I sent it to her. There she go. No, she denied it. She don't want it.
it's
she
not
got
giving me like,
Tara is still listed as a presenter, so he had to stop presenting. So stop sharing your screen, Tara. Thank you.
Yes, sir.
Now we're going to go to share the screen again. Share. Okay, so go ahead, Kiara.
yeah. All right.
And which problem do you have, Kiara?
Okay, so we have problem, I don't know this.
You have
We got
7 or
problem 6.
6? Okay, so they had a difficult one. So everyone turn to problem 6. So you can see Kiara is going through and doing her change in cash first.
All right. So this is problem 6, and the change in cash was $300,000. So I went down here, and we're gonna put. Well, first we're gonna look at the beginning cash. The beginning cash was $100,000 in 2012. So what we're gonna do is we're gonna put $100,000 in 2012. And then we're going to look at the less ending cash balance, which was in 2013, which was $400,000. So we're going to go back down and put that in the less ending cash balance. And from there, you know that our end is $300,000.
So that's the answer. That's what we're looking for. Left off a 0.
All right. So now what we're going to do is we're going to look at.
Would that be negative? Will her ending cash balance be negative or be positive?
It went
It'll
up,
be
so
positive.
positive. She went from 100 to 400. So it increased by 300,000.
Okay.
All right, so from there, we're gonna go look at our net income. So we had a net income of $650,000.
See, Joanna,
So where we're gonna go is net income under the source and put $650,000. And then what we're gonna do is, and then what we're gonna do is go look at our. Let's go down. And then from the net income, we're gonna look at the depreciation. No.
Okay.
No, we're gonna look at the accounts receivable.
Depreciation.
Depreciation?
Yes.
Okay, so we're gonna go to depreciation. So our depreciation was $50,000. So we're gonna go down here and put 50,000 for depreciation. And all right, so we're gonna go back up and we're gonna look and we're gonna be like, okay, so after cash is accounts receivable. So we're gonna go to accounts receivable and we see on the first year we had 125,000. The second year we had 225,000. So we had an increase of $100,000. So we had an increase in current assets of $100,000. So what we're gonna do is go back to our chart and we're gonna look at increase in current assets of $100,000. We're gonna put accounts receivable in there. And then we're gonna put $100,000. And then we're gonna go back up and look at inventory. So our inventory was $150,000. And then in 2013, it was $450,000. So we had an increase of $300,000. So we're gonna go back down and go under increase in current asset, put inventory. And then we're gonna put $300,000 here. All right, and then we're gonna go back up. And then we're gonna go to accounts payable. So accounts payable, we had an increase of $200,000. So we're gonna go back down. And accounts payable is a current liability. Is an increase in the current liability. So where we're gonna go is put that in there. And we're gonna put $200,000. All right, and then we're gonna go back up, and then we're gonna look at the sale of land. So, all right, let's go down.
So what you see on the income statement, the net income was $650, but included the gain on the sale of the land of $500. In operating income, we only want recurring income. We don't want income that's not going to recur. So take it away.
All right, that's a good input you put in there. So gain on sale, well, we sold some land, so we're gonna put land right here, and then we're gonna put $500,000. And like he said, we only made this for 1 year. We're not gonna have the same land next year, so we can't. That's not gonna be added to our what is it called?
Net income. So the $650 net income
Net.
is not a realistic income going forward. Okay.
Gotcha. All right, so from there, we're going to just add it up. So our net income, depreciation expense, and accounts payable, all that is $900,000. So we're going to go down here to total part 1 and put $900,000 in there. And then we're going to go up a little bit so y'all can see. And then so for our account receivable, inventory, and sale of land, we also got $900,000. So we came out with 0.
So you see from operations, there's a problem. If you just look at the net income, you would think they're doing well, but that gain on the sale of land was not from operations. Okay.
All right.
Hey, Kiara, can you scroll down to your your beginning and cash balance and your ending cash balance?
Okay.
Okay. Thank you.
How's that super team coming? How's Super Team 3 coming?
All right. So going on to part. Oh, I'm sorry. Go ahead. Continue. How y'all going?
We're not doing it. We're trying to figure it out.
We're trying to figure out what the hell it is.
All right. So going back to part 2, we're going to put under cash proceeds from sale of long-term assets. From part 1, we're going to put sale of land. And we have to, so from there, I'm going to go back up so y'all can see it. 500,000. So it was 500,000 originally. And then
Go back there again.
All right.
The gain on the land was 500. The land was listed at 100, so that's what it costs.
Yeah.
So if you paid 100 for something and you made 500, how much cash you getting?
600.
Okay, 600. So let's
So
bring
we're
that.
going to go back down and we're going to add the 100 to the 500,000. So we're going to get 600,000 for sale of land. And then, so next we're going to go to equipment. So our equipment, we had $100,000. $100,000 the first year, and then for the second year we had $550,000. So we had an increase of $450,000. So we're going to go back down. Purchase of a long-term asset, so it's going to be our equipment, and then we're going to put $450,000 here. So with those two, you're going to come down just a tad bit more right here for totals of part 2. And it's going to be 600. Just bringing it down. And then this is going to be 450. And then we take the difference. And it's going to be 150,000. All right. So moving on, we're going to go to part 3. So insurance of stock. So we're going to go back up to our income statement and look at for common stock. So our common stock was 50,000 in 2012, but in 2013 it was 350,000. So that makes our increase $300,000. So we're gonna go back to the insurance and put $300,000. And then we're gonna go back up. And after insurance is bonds, but we didn't have no bonds because they didn't make no money from bonds. So we're gonna go to payment of dividends. And how we got our payment of dividends was we got the beginning cash,
Retained
which was,
earnings.
the beginning retained earnings. Where is that? Which was $300,000. And then we're going to get the net, which is in our case income, which was $650,000. And then the and as you still look at the retained earnings for 2013 is $800,000. So $300,000, $650,000.
Show them the net
And then-
income. Show them the net income.
Net income is $650,000 right here. So $650,000 less the retained earnings from the first year, which is $300,000, and then the what is it called? The ending return is $800,000. So however we got $800,000 was the difference between. It's gonna be, I don't know how to say this. It's gonna be the beginning income plus the
So the beginning retained earnings plus the net income.
The net income minus the ending retained
minus the dividend. Thank you. Which gave us the $800,000. So that made our dividend $150,000. So we're gonna go back. To our payment of dividends, and we're gonna put in $150,000. That's how I got it. I'm so sorry, it was so confusing, y'all. All right. So from there, we're gonna add up part 3, which gave us $300,000 right here, and then our 150, and then left us with 150,000. All right, so let's go check our math. All right, so first part we had got 0. The second part we had 150,000. The third part we had 150,000. So 150 plus 150 is 300. So that's how we got our change in cash flow of $300,000.
Hey, Boyd, can I ask you a question about hers? Because I think that's messed up on mine. Okay, so could you scroll up to the part where you put your gain and sale on land? Right there. Okay, so she started off with land of $100,000 the first year, and the second year her number is 0. So wouldn't that be a decrease in $100,000?
Now let's go back up to the balance sheet. Okay. We're trying to find the cash, and so land went from 100 to 0. So remember, whenever the asset goes down, what?
We sold it.
So that's a source of. So that's a source.
Oh, I see.
Okay. And that source is going to be what it costs plus the gain. So the asset went from the source.
Okay, so you lost $100,000 land, but you gained the $100,000 worth of land that you spent on it, plus the $500 that you made when you sold it.
Correct.
Okay, thank you.
Okay, Kiara, can you explain to me the equation again that you did? You was like, yeah.
Oh, for the depreciation?
So she wants a statement of retained earnings. Can you type that in somewhere? Yeah, just put it down there. Just go and put it at the bottom. Yeah.
She wants the what?
Statement of retained earnings. So the beginning retained earnings So put
Oh,
beginning retained earnings. And how much was that?
that was $300,000.
Was it 300? No, it's more.
No, it's $300,000.
Okay. Okay,
And
then
then the net
plus,
income.
plus the net income. Now, if you had a loss, you go the other way. You subtract it. But it's plus the net income. And how much is that net income?
$650,000.
Okay. Okay.
And then the
Let's
total
just
was
total.
$800,000.
800 was the ending retained earnings.
Yeah, 950,000 is the total, and then you would
Oh, my bad.
subtract the ending retained earnings.
Right. So that's 950. So I put under that total, go under the total equal and put less the dividend. Go down, less dividend. Wait a minute. Can you go down? Go over to the 950 and try to go down.
Under it?
Yeah. But no, go back over on the total.
All right.
Put less dividend. Now put a question mark under the 950. So that's what we got to solve for. Now put in the ending retained earnings. Now go all the way down. Go back to that question mark. And enter.
Below that?
Yeah.
And that was 800,000.
The statement of retained earnings formula, well, you know everything but the dividend. Put those things in the back into the dividend number. Any questions?
Is that what?
Yeah.
So, I don't know how to get you back in control. Can you take it?
Well, no, you can keep it.
No.
Let's see. Joanne, are you ready?
Yeah, I'm ready.
Okay, so what? Go ahead and blank all your stuff out.
I did already. Are you talking about for her? She can do it for me?
Yeah, I was gonna say she was there. Just give me a blank one and you type it in for her. Put in a blank one for her. Can you do that easily?
All right, let me see. I don't got her balance, her income statement on.
She's gonna give all that to you. Which problem do you have, Joanna?
I have 8-4.
Okay, she has 8-4. Just try to do the numbers only, cut the numbers only.
I guess that'll be easier.
Yeah, that'll be easy, just cut the numbers. All right, Joanna, tell her what you want to put in.
Okay, so for problem 8-4, the first thing we're going to do is calculate our change of cash in part 4.
Okay.
So we started off with cash of $100,000, and our ending cash balance was $600,000. So we have a change of $500,000.
So that's the answer that she's looking for.
And then the second thing we're going to do is input our net income for our problem. And we had a net income of $500,000. And the next thing we're going to do is start with our accounts. So we have account receivable, which is a current asset. We started off with 125, and we ended off with $425,000. So we had an increase in account receivable of $300,000.
It's going to be a use.
Yes.
What was it again?
$300,000.
All right.
All right, and our second account would be for inventory. We had an increase. We started off with $150,000. We ended with $450,000. So right under there, we have an increase of $300,000 for inventory. All right, and then next would be equipment. Equipment is a long-term asset. And we had a difference of an increase of $350,000. So that's going to go in part 2.
No, another side.
All right, and then to do our depreciation expense, we had $200,000 for depreciation at the top.
Where else could you get that $200,000 from, Joanna?
Besides getting it from the top in the income statement, we started off with a negative $25,000 and ended with a negative $225,000. So if you didn't have the income statement, you can calculate that you still lost $200,000.
Okay.
You said depreciation?
Yeah, that'll go at the top. The very first line under net income. Yeah, right there. And it was for $200,000.
$200,000.
Mm-hmm. Okay, and then the next thing on the list would be land. So, Professor, is this where I do the gain of sale on land?
Correct.
Okay, that's where I kept messing up. So we would go down to where we have a cash from sale of long-term asset. We started off with $100,000. We ended with $0, and we had a $500,000 gain of sale on land. So next to land, we would have $600,000.
But you got to go back up to part 1.
What was the gain on land?
We had 500 gain on land, and we started off. Oh, okay. I see.
So what we're doing here, Joanna, is they've got that gain in the income statement, but it's not a continuing item. So when we put it over there as a use, it nullifies it in the operations.
Yeah, I might need you to dumb that down for me later on in office hours, because I don't. Just hearing you say it doesn't make any sense, but I'm sure if you explained it a little bit more, I'd get it.
Tell me, well, and what you'll tell me once you finish the problem is whether you would invest $1 million in this company.
Okay, cool. All right, so the next thing on the list, we're going to go to liabilities. starting off with accounts payable. So we had an increase in our accounts payable of $200,000. Okay, and then the bonds, that would be in part 3 as a long-term liability, right, Professor? Long-term liability?
Yes.
Okay, and so we had $100,000 on that one.
You said bond?
An increase in bonds of $100,000. Would it go on the other side?
The other side.
Okay. And does it matter if we put it under the receipt, or does it matter where it goes?
What you mean?
Like,
yeah, long-term loan. Yeah, it goes under that.
Under there, okay. Okay, then the next thing would be our common stock. So right under the long-term bond payable, we had common stock of $750,000 difference.
Of common stock?
Mm-hmm.
Go up higher. You got issuance of stock up there. Yeah.
Okay, yeah, and the issue with the stock box, I guess. Okay, so that was $750,000. Okay, so now on to the dividends section. My little formula we had was start off with the beginning retained earnings of $300,000. We had a net income of $500,000. So far that's a total of $800,000. Oh, I'll wait for you. Yeah, oh, yours is the same. Okay, so, and our ending retained earnings were $400,000. So that leaves us with the dividends of $400,000.
So we're gonna go back up and then
Perfect. All right, so start adding up totals. Starting in part 1, under the source side, we have totals of, what is that, 500 and 200? Yes, so that's going to be totals of $900,000. And then on the use side, we had $500,000 plus $600,000, which gives us $1,001,000. $100,000. 100,000. All right, and the difference between those would be negative $200,000. Okay, and then for part 2, our totals would be $600,000 on the source side and $300,000 on the use side, which leaves us with a positive $300,000. Okay, and then on to part 3. On the source side, we would have a total of $850,000. And on the use side, total of $400,000. And that leaves us with a positive $450,000. Okay, so hopefully those add up.
All right.
So we start off with a negative $200,000. And then to that, we're going to add $300,000. And then we add $450,000, which gives us $50,000 over what we're supposed to have.
You need to find it.
Okay, thanks, Kira.
No problem.
Okay, so would you invest, we'll find that problem, but would you invest $1 million in this company?
I would say no, because most of their cash flow came from the sale of land, right?
Correct.
So that means they're not making any money.
Correct. But if you just looked at the net income, what would happen?
You would think that they were making money.
Right. But that income would not be there the next year.
Mm-hmm. So you're not going to tell us where we messed up at?
No.
I have to look at the balance, the income statement, because I wouldn't know if the numbers would just.
Oh, so you fixed yours by looking at the income statement?
That's why I kept on going back, because the numbers, I had to keep looking at the numbers to make sure the numbers lined up and everything.
Okay.
It might be one of the numbers. It don't look like it was something big, so it might be one of the numbers.
Professor Boyd.
Yes, sir.
Hey, Professor, I have a meeting I have to log into.
Well, you got that big team. You got
that to do tutorials.
Support team.
Huh?
So this is
You got that big support team.
Well, they're at my house, so they got to go in the meeting too.
It's gonna auto.
Okay. I'm just saying you got the rest of your team members.
Yeah, can we do virtual what is it called?
Virtual happy hour.
Can we do what is it called? Tutorials tomorrow?
What?
Look, hold on.
What time are you available?
Everybody else doing? How's everybody else doing?
We all gonna be there.
We all gonna be there. The whole group going to join the Super Squad.
What about everybody else other than Kiara?
The rest of the people. We talk about our group.
We trying to get it down.
Well, Kiara, what about the rest of your team? What did they send you?
Huh?
What did the rest of your team send you?
What you mean?
I mean, you said you worked it. Did they send you their solutions?
Oh yeah.
And
it was a little off, but the numbers was just a little off. I added it up, but we got to the bottom of it.
Hey,
y'all got
3
to
o'clock.
3 o'clock tomorrow. I'll see you there.
Okay, so everybody else needs to get to the bottom of everything. What we will do, I guess we'll push the test back. So the teams that didn't go today, you'll go on Tuesday, where you will be showing the problem complete. So you see what we had happen today. We work it all the way through. I will send you out your study problems at some time. So we'll move that back to Thursday, Tuesday. That'll give you a little more time to work on it. Then your individualized test will be next Thursday also. Now, there are many versions of that individualized test, just to let you know. So make sure you know how to do this. Any questions? So we said tomorrow at 3, a few people would be here.
Yeah, I guess I'll come too.
Tomorrow where?
We speak.
3.
Where's Corey Clifton at? She missed office hours the other day.
She was in here. I don't know what she was.
Tomorrow at 3.
I'm here. I
Tutorial,
know I
is it?
missed them.
Missed
I'll be
office
there.
hours yesterday, and you hadn't said
I
anything.
know I did.
Are you starting off slow again, or what?
No, I'm not starting off slow. I'll be there tomorrow for sure. I got you.
All right.
We doing another tutorial.
Start now.
Hey, Professor,
You said what?
when I fix mine,
Start now. Go ahead.
when I fix mine, do you still want me to turn in a new one to you or what?
No, you don't have to turn in a new one. I will probably open up a corrected one, and you need to let your team work on it and send it in the corrected one. So now it's a matter of everybody else on the team being able to do this.
Okay.
So you can you can have your team members send in a corrected one, but not you. We looked at it, they've seen it, let them now go through and do it so that they'll be able to perform.
Okay, thanks.
You're welcome.
So you'll be going over the test tomorrow then?
Go over what?
The test that we have next Thursday, you gonna be going over it tomorrow?
This is the test, what we did today. Doing the statement.
Oh.
No, this was a tutorial.
So no, you can still go over it. That's what tutorials is for. Yeah. So.
Oh, wait a minute. I'm just saying that, okay, this is what we'll be covering on the test.
Oh, okay.
So yeah, we'll talk about the test tomorrow and what's going to be on it. And then I will get you your
Multiple choice.
study problem assignment. Multiple what?
Multiple choice.
How do I give you control?
Why y'all laughing?
I see it.
You said multiple guess, Miss Brady?
Why y'all laughing? That was a legit question. No? So that mean no?
Well, we may have some, but we like to work some problems too. Okay, so we will, we'll that'll be at 3 tomorrow. So if you have any questions about the study problem, I'll put that in Blackboard and show you what team is working on what study problem. And that study problem will probably be worth 20 points. You also have your cash flow paper you're supposed to be working on. Are we coming on working on the cash flow papers?
What are you talking about?
What are we talking about? You're supposed to pick a company that you plan to work for. Are you going to make a major purchase on? Then you're going to go through 3 years of their cash flow statements and determine whether you would invest $1 million with that company.
And this is due on Tuesday?
I'll probably move it back to Thursday now.
Okay, thank you.
But that's, it's listed as what's required, so I'll go ahead and change all of that. Any other questions? Samantha Clark, Taylor Jones, Sanyu, Demas. Y'all keeping up?
Yes.
Okay, I'm taking your word, Samantha. Arian? So the office hours, same classroom and everything. And so if you're behind, you're having some issues, there'll be office hours on Friday, there'll be office hours on Monday, there'll be office hours on Wednesday. So we have the virtual office hours, so it's no excuse.
What time are your office hours on Mondays and Wednesdays?
3.
3 o'clock?
The same time. I do the principals one first. So
Okay.
they come at 1:30.
All right.
And if need be, you can always email me if you need a special time. Those times not working or you just need a special thing answered. You can always email me for a meeting.
You don't email back though.
Well, when I get around to it, if I need to answer, I will. Miss Brady. All right, so I'll look at those. I'll try to catch up on all my emails. It's best to come into the office hours, especially. Because I've got 40 students in each class, and half of them are emailing, and I got the exams and developing all of this. So sometimes I get a little behind. So come to office hours. Okay, Ms. Brady? Thank you.
Yeah, that sounds better. Okay.
Yeah, that typically works out better because you're in there with other people have the question and issue, and you know I'm going to be there and we can work on it, and you can get support and see what other people are doing. So most times that's better. Eventually, I'll be meeting with the teams. So I'll be meeting, so it'll change, and we'll be pulling there. So
Okay.
everyone have a good weekend. Some of you all will see tomorrow in happy hour.
Yep. See you tomorrow.
I like Grand Marnier and my margarita and a
Ooh,
splash of
okay.
orange juice.
Okay.
So we'll see who can make the best margarita. Okay, so we'll see you all. Say what?
I get extra credit for that?
We'll have to have a taste test when we get back on campus, and whoever has the best one get extra credit.
Okay.
All right. We'll talk to you all later. All right, goodbye.
Bye.
Bye.